You're looking for that recovery in 2025, a recovery to a slowdown that Krishna says hasn't happened yet. Samir, can you help us understand the next 12 months and how you think this plays out?
So I think for markets anyways, I think probably the next few months are going to be very choppy. I don't anticipate new highs in 2024 until maybe after the elections. And again, I think that's pending on when we finally get kind of clarity around the elections, which, possibly could push into late 24, early 25. I think once we get that clarity, then I think the markets can kind of figure out, all right, which set of stocks will do well kind of in this administration, whoever that might be. And then I think, we do make new highs probably in 2025 alongside that economic recovery.
Do you share that view?
Well, I think the overall trend for asset prices is probably higher. I don't think it happens in early 2025. In a lot of the policies that will be implemented after the election, I think if there's a driver on the upside, it's probably going to be driven by that far more than the election results themselves, because there'll be some amount of uncertainty. But having said that, though, I think from an economic perspective, things are at a good place. The real question is, how do you kind of incorporate that okay economic news in the context of valuations and likelihood that inflation remains somewhat elevated relative to what the Fed would like it to be.
I love this, right? You guys have different kind of economic outlooks, perhaps, but you might have the same actual investment thesis. You're still just saying T-bills and chill.
Well, T-bills and chill, because I think the summer is basically lost, like the second quarter was lost. And since things started not slowing down in February, it became quite clear that we are going to be in this range-bound market for quite some time. And that is how exactly it has panned out. It doesn't mean that things cannot go up. It's just that we have to catch up to valuations, let the economic growth run, and let's see if inflation slows down.
Samir, are you T-bills and chill as well?
We don't mind the short end of the curve, but I think as we kind of approach the upper fours on the 10-year, I think we would like to lengthen duration. I mean, I don't know if it takes 6 months or 12 months for the Fed probably cuts. And at that point, probably you will see people start to extend duration. We want to be a little bit ahead of that. I think, from a market standpoint, from an investing standpoint, I think the nice part for investors, and we've been on the right side of this, is if you're in large caps, you get better profitability, better quality, better performance. That doesn't happen very often. So right now, you can fade EM, you can fade small caps and kind of concentrate more on the larger cap side and be okay. And I think that's kind of the way to approach the next few months.
Krishna?
I think the point Samir is making is a really good one, which is if you look at the markets and you kind of see which market has a higher potential of running away from you in a hurry. I don't think that's equity market, and I don't think that's bond markets on the negative side. I think if it is, it's bond markets on the positive side.
So yields dropping.
Yields dropping, bonds doing much better. I think if you wanted to take a punt on the risky side, that's the punt I would take rather than the other way.